Assalamualaikum warahmatullahi wabarakatuh. Hello, I'm Dian Firdayati and I study in Telkom University. Welcome to my presentation. Before we're going into my presentation, I would like to express my greetings to Akuntansi Akademik Yogyakarta. Thank you to Akuntansi Akademik Yogyakarta YKPN, the leading of vocational accounting education, for facilitating the competitions of accounting presentation in English. And congratulations for your 47th anniversary. Alright, let's get into my presentation. The topic of my presentation is the financial accounting, and we will discuss more in details about statements of cash flow. But before we are going into the main discussions, I would like to tell you the 4 outline points of my presentation. There are 4 outline points here. First, definitions of financial accounting. Second, statements of cash flow. Third, the purpose of statements of cash flow. And fourth, preparing the statements of cash flow. Right, starting with definitions of financial accounting. Here is definitions of financial accounting. Essentially, financial accounting is known as the area of accounting that presents financial information to external user. So, what is the exact definition of statements of cash flow? And what are the information that need to be informed in statements of cash flow? Statements of cash flow is one of the financial statement. It explains the sources or inflow and uses or outflow of cash over a period of time. Thus, every company should provide those information to the external user. Then, what is its purpose? What is it for to prepare statements of cash flow? There are 3 main purposes of statements of cash flow. First, it's to determine success or failure of the corporation. Second, it's to manage the decision making about the business operation. And third, it's to give the evaluation toward external user for financial performance. After you have known the purpose of statements of cash flow, let's talk about how do we prepare it. But before we are going into the preparation of statements of cash flow, you need to know that statements of cash flow is satisfied into 3 activities. First, it's operating activities. Second, it's financing activities. And third, it's investing activities. Now, let's define it one by one. Operating activities show cash effect of transaction that creates revenues and expenses which become determinations of net income in income statements. In addition, to calculate these activities, there will be some more steps in different methods, and we will discuss it in details in the points of preparing statements of cash flow. Financing activities, it includes liability and stakeholders' equity item, includes obtaining cash from issuing debt, and repaying the amounts borrowed, and also obtaining cash from stockholders and providing them with return on their investment. The last activities is investing activities. Investing activities, it includes acquiring and disposing property, plant and equipment, and also includes acquiring and disposing investment, lending money and collecting as well. Furthermore, you need to decide what method are we going to use. Actually there are 2 methods of statements of cash flow. First, it's direct method, and second, it's indirect method. Direct method is simply reports all cash received and cash payment in operating activities, whereas the indirect method is reconciled from the net income and cash provided by operating activities. So from those methods, it's actually only differed in operating activities. The other activities will be the same as it should be. Before we are going into the next point, I would like to show you the cash flow from operating activities using a direct method. And then here is the cash flow from operating activities using indirect method. After you have known the activities of statements of cash flow, now let's go to the step of preparing the statements of cash flow. First, it's to determine the net cash provided or used by operating activities. Second, determine the net cash used or provided by financing and investing activities. And the last step is compare the statement of cash flow with the cash account in balance sheet to see that if the amount is matched. Now let's apply those steps into case study. I'm going to use the direct method to make the statements of cash flow, and the study that we're going to use is at Kimport Company. And before we're going to do the case study, I'll show you the income statements and balance sheet of Kimport Company. Here is the income statements of Kimport Company for the year ended December 31st, 2013. And here is the balance sheet of Kimport Company for as December 31st, 2013 and 2012. Starting with determining the net cash used or provided by operating activities, as it is the first step. To know the format of cash flow using the direct method in operating activities, you could see this format. And you could also make the summary like this for operating activities. First, we need to find out the amount of cash collection from sales or cash received from customer by subtracting the sale with account receivable when it is increased, or add the sale with account receivable when it is decreased. Then subtract it with bad debt expenses. Second, we need to find out the amount of cash payment to suppliers by adding cost of goods sold with inventory when it's increased, or subtracting it with the number of inventory when it is decreasing. Then subtracting it with account payable when it is decreased, or adding it when account payable is decreasing. Let's see. We could find the amounts of cost of goods sold in income statement, that is 380,000. And for the numbers of inventory in balance sheet, it's 193,000 in 2013 and 179,000 in 2012. Thus, it is 14,000. And for the account payable in balance sheet, we could see that in 2013, it's 34,000, and in 2012, it's 77,000. So, it's 43,000 when we compare. Thus, the total of cash payment to supplier is 437,000. Now, the last step in operating activities, we need to find out the number of cash payment for operating expenses. Let's see the formula. To get the amounts of cash payment for operating expenses, we can calculate it by subtracting the total operating expenses, excluding bad debt expense, with other non-cash expense. Then add it with other accrued liabilities when it increased, or subtracting it when it decreased. And for the formula in the last step, we could find the operating expense in income statements. We could also find depreciations in additional informations and the prepared expense in additional informations. We could find the numbers of operating expense in income statement, that is 90,000. And as I said before, that the depreciation expense in additional information, so we got the number from additional information for it's 54,000. And for prepared expense, we got in additional information, that is book equipment, which is 6,000. And we add this number, so the total is 60,000. Thus, this number will be deducted by operating expense, so the total will be 30,000. Finally, we have done the step from operating activities. Now, let's move into investing activities. Refers to the definition that I have mentioned before, that some accounts which is included in investing activities are liabilities, stakeholders, its wind up, stockholders, and return investment. Let's see, for investing activities, we have 4,000 in disposal of planned asset from additional information. And we have land from comparative balance sheet, that is 25,000. And we also have purchase of equipment from additional information, that is 82,000. And we deduct this number with 25,400. Thus, the total will be minus 53,000. After investing activities, finally, this is the last activities of cash flow. It's financing activities. For financing activities, we have dividend to stockholders, that is 75,000 from additional information, and we deduct it with investing activities. Thus, the total will be minus 11,000. At the last, we need to know the amount of cash at the end of period by subtracting decrease in cash, that is 11,000, with the amounts of cash at the beginning of period. Finally, we have prepared statements of cash flow. How is it? Is it easy, right? So, which method is reliable to use? Actually, it depends on the company. Some company might be able to manage their cash flow with indirect method. But according to the accounting standard preference, whether it is GAAP or IFRS, they prefer or recommend the corporation to use direct method. Why? Because it's easy to understand and it provides more confidence to the investor, which they rely to the standards of accounting. Okay, finally we have reached the end of my presentation, but before we part it, I would like to say thank you to Akuntansi Academic YKPN, our reliable vocational accounting education. Goodbye!